we see Bitcoin really breaking down. Yes, you kind of formed a triple top of some degree here. You sold off, but you were able to hold key price levels to a certain extent. We were able to hold a level here at 100,000 until we broke it in November, but we were able to hold key levels above 75,000 and we were able to do that. But now we've broken through swing lows and support levels. And if you even zoom out in Bitcoin, you can see how what's interesting is this was a previous high right here. So this low here, we had a low here on this pullback right at the $74,000 level. And that matched where we made a previous high in March of 2024. And that was a very key level, in my opinion. We needed to stay above that level because that was a level that was respected twice. It was respected here at the top, and then it was respected here at this low here. And we sliced through that like a hot knife through butter. And we are still not super, super low on the RS line. We can easily go lower. Yes, we're low. We're at 27, but we can go to 20. Okay. We can go to 20 on the Bitcoin. And I'm saying this, you know, I'm saying this as someone that wants to be bullish on Bitcoin long term and wants Bitcoin to go higher long term. I'm just saying here that this is, this is a very concerning drop from a technical standpoint. You know, you go below these lows, that's one thing, but you make a new low below these previous lows, and then you break the previous high. That's definitive bearish tape action. And now we take this chart that we're looking at here. We look at this breakdown here. We go and look at the NASDAQ. We see here that the NASDAQ is now starting to fall, and it may very well be at a point where tech stocks follow Bitcoin. Overall underlying idea behind this is that crypto follows liquidity flows and then tech stocks follow. But Bitcoin has a much more quicker impact on its moves based on what liquidity is doing. So Bitcoin and slash crypto moves are first, and then stocks follow. And that is what may be happening. Because when you look at these charts here, what was very concerning to me over the past couple months in the NASDAQ is that we had a high here. We made a high here in October, late October. And we've been in this sideways range, this back and forth sideways range, basically throughout November, December, and then through January. And now we are at this point breaking these key levels here right around the 25,000 level that needed to hold if we were going to continue to push towards new highs and make the case for making an all-time high. But that is no longer the case, and now we are breaking through these swing lows here right around the 25,000 level. And this key level here, this is very key now in the NASDAQ 100 futures chart, is that this level here, which is very close to this big down day in mid-October, well, right here, you're right at 24,000. Let me zoom in here. This low of the day, this needs to hold. and we can round it off right to like 24,200. But that is the key level that needs to hold. When we trade below and break this 24,200 level on the NASDAQ 100 futures, and I'll take a look at that that level on the Qs right after I'm done looking at this chart. If that level breaks, you're going to get some big selling, and you're going to probably get a big spike in the VIX, and it's going to be a vicious. You may get that point where you're at that point if the Nasdaq breaks this level, and we'll look at this level in the Qs after I'm done looking at this chart. That low, that swing low, if that's broken, you're going to get a correlated sell off. And in my gut, it seems like that's what we need to have a definitive, at least a tradable bottom. So, I want to be bullish, but this is not bullish tape action. So, we're still at 34 on the RSI. This can get to 30 at least to 30. So, yeah, it can go lower. So let's take a look at the Qs to continue this thesis here. That swing low on the Qs chart is right at 580. We'll zoom in here, take a look. 80. There it is. We got a whole 580. And that low, that swing low on that day, we actually traded to 5 on that day. We traded as low as 580.74. So mark that level, 580.74 on the Qs. That was the low of that day. 580.74 on the Qs, QQQ. If we break 580.74, you're going to get a correlated nasty sell-off across the market. And that can easily happen. Like I say here, that RSI is low at 34, but it can get lower. I mean, we can get closer towards 20. We can get towards 30, under 30. Take a look at the SPY here, and it's holding support pretty well. We look at this big down day that we had on January 20th, and we are testing this low here that we had on January 20th. We actually traded a little bit below it today, but we're still holding that level. So we're holding that level. And we go back and take a look at this same chart on the S&P futures. And we see that on this chart, we're testing that swing low that we made on January 20th. And we actually did trade below it today, but we're holding that level right now. So everything looks okay right now. But if the S&P 500 breaks this key level and we get another down day tomorrow, then we can start to also see some, vicious selling to the downside and get that correlated. And then you get a big spike in the VIX. Then you get a washout type of tape action. Then you get people puking their positions, and then you get some type of trade bottom. When you see this type of rotational sell-off where there's lots of stocks that are unscathed, and I can take a look at a couple stocks after I'm done looking at this chart and show you that yes, today you have stocks that are up, but you also look across the board. There's a lot of stocks that have not been smashed like other stocks. So we can take a look at a Robinhood, and this stock is just getting. I mean, this was a stock that when the market peaked in October, it was traded at 150. Now it's at 73. Take a look at Palantir, and Michael Burry's having his vindication. This is a stock that was over 200. Now it's at 129. And these stocks are getting smashed. Really have come down a lot. Yet you can take a look at a stock like Caterpillar, and it's just down a little bit. And this is an AI exposed company. It's just down a little bit. Google had earnings last. It's down on the day, but not that much. It hasn't been take a look at other stocks. Eli Lilly, it's down today, but it's still holding up pretty well. I mean, it's not by no means necessary is this stock getting smashed like other stocks. Let's take a look at Costco. It's really come back nicely. This was a stock that got smashed before, okay, and now it's coming back nicely. Let's take a look at here's another one. Heck, look at this stock, man. This stock has been ripping. The money is left Palantir, left Robinhood, and gone into Exxon. Crazy, right? I mean, they just like they just like are running for safety, value plays type of stuff. So this rotation is very evident when you look at the charts. And I just gave you a few examples, but it's something to be very keenly aware of. And what I think we need is stocks like ExxonMobil, not necessarily to crash, but just to get some selling along with all the other stuff. And then you get your real bottom, or at least a definitive trading. That's what we're looking at here. One thing that is stuck out very, very well is the stocks that have been exposed to the AI high bandwidth memory. I'll go through these stocks right here, right now. As take a look at Micron. And Micron has been holding up very, very well, and it's had a nice run. It has a nice pullback to the 20-day moving average. And I'm very bullish on Micron for the long term because of this thesis of them making the high bandwidth memory that is used in the AI data centers. And if you listen to conference calls, the two bottlenecks that everybody talks about is the bottleneck in energy. We need energy to power data centers, but then analysts are quick to ask about the issues with memory, and CEOs are quick to talk about the issues with memory and how compute across the sector in AI and data centers, but also in just getting a laptop. That's something that I've just recently found out. Just getting a laptop and getting memory chips for a laptop or a car or whatever. That there's a bottleneck there as well. And the prices for these memory chips over the past 3 or 4 months are selling for 4 to 500% more, and maybe even more now. After you're done watching this video, it may be more than that because the prices continue to go higher and higher and higher. So there is a specific issue in the world because compute needs memory to do all the inferencing that is being demanded when people are using these large language models. So it was one thing to build out the large language models and to train the large language models. Well, now people are using the large language models, and to use the large language models, you're doing inferencing. And to do that inferencing, these large language models, they remember the stuff that we tell them. We have conversations with these large language models, and these large language models remember the conversations, and that remembering is eating up memory that is needed to have those functions happen when we use computers and large language models and so forth. So there is that is a key theme that I think is very investable. And this theme is going to continue for the foreseeable future. So it's not going to be fixed within the next 3 months or 6 months or 9 months or maybe even 12 months, maybe even 15 months. It is a serious issue that needs to be dealt with. And as a result, high bandwidth memory prices are going up 400-500% over the past couple months. And these companies that provide this memory the stocks are going through the roof. And so, as long as the underlying thesis is intact, I think that any pullback like the one you're seeing now needs to be bumped and be ready for it to sell off if people get emotional and sell off the stock or do whatever stuff happens. Who knows? But, you know, this pullback to the 20-day moving average is looks very, very constructive to me. And I think I think it's a buy right here. Like you can use the stock pulling back to the 20-day as a trigger to buy the stock. And with that much of a strong conviction within a investment thesis, I think you can hold on longer and make it a longer term hold. And that's the way I'm playing it. And I'm also buying calls too. I'm not buying calls today because the market's so sketchy, but I have been. And if Micron, trades back above the high of today, above the 20-day, and trades up towards this 10-day moving average where this orange line is, that's a trigger for me to buy some calls. I already bought some shares, so I'm good there. But you can look to, you know, buy some calls if you're so inclined to be very aggressive of a stock like this. The one thing about trading call options from the long side is even though I'm bullish on an individual stock, I want the underlying market to be bullish as well. And when you have this many stocks being sold off, I'm less inclined to be super bullish on a stock like Micron. But if the market turns and then Micron trades above 400, yeah, I'll probably buy some calls that expire within 10 days and look for the stock to trade above 450 kind of thing. So that's a stock that I like. Let's take a look at other, memory stocks and disk drive stocks. SanDisk is another name in that sector. Stock pulling back, not even to the 20-day, just to the 10-day. And I think that's a very nice chart. And again, this thesis is intact. I think I like this stock here, right at around 575. And you may want to buy a few shares here, like 575 or 565, if it trades down to 565 or so, and then be ready to buy more shares when it trades down to 487, where the 20-day is. And if it doesn't trade there, then that's fine. You still own some stock. So that's the type of thing that's going on. Another stock in that area, Western Digital, same thing. These stocks are all, as long as this thesis is intact, whenever it trades back to, key moving averages, it may undercut some moving average for a short period of time, but these are points to buy. So for Western Digital, you can nibble here at 257, but also be ready to buy more if it trades down to 240. You can see this every time it trades to its 20-day. It was a good buying opportunity. That's a point where I would put in an order to buy some shares. Just put in the order right at 240 or 241 a share and be ready to buy shares there for Western Digital. So that's the memory space. That is a thesis that I don't think is going anywhere anytime soon. So that's why I like it. We have Amazon coming out with earnings tonight. Amazon coming out with earnings ahead of earnings. Stock is getting hit ahead of earnings. It's testing the swing low that we had here in December. Still trading above this swing low from November, which is a good sign. But let's take a look at the options ahead of the earnings. Let's see, there's lots of options traded in Amazon today. Over 1 million contracts traded. And we take a look at the options that expire tomorrow in Amazon. And we take a look at the straddle, take a look at the expected move. And we're looking at $18. $18 up or down with Amazon ahead of earnings. So that's the expected move tonight. $18, almost $19. Yeah. Go down to close to $200 a share, or close to 240 a share. Go back to the chart. You can see 200. So we can come easily down to like 202, $203, somewhere around there. $204, $205, somewhere around here. And we can also go up you know, 32, 42, somewhere around 240. So that's the expected move for Amazon tonight. And so far, with the big cap tech stocks, they have not acted favorably on the earnings news so far this quarter. The earnings calls have been good, but the stocks have not acted favorably on the earnings calls so far. So, I like that Micron's bucking the trend and is up today. That makes me even more bullish on the stock. I'm getting sick and tired of the selling. As a bull myself, you get kind of sick and tired and worn out with the selling. So there's a part of you that just want to get the washout over with and the selling over with, and then you can move on. However, just looking at this tape action, what I want and what is going to happen are two different things sometimes. And the fact that it's the selling is going on, but it's not like vicious and it's not like comprehensive and total. And it's not just like, beat the stepchildren type of stuff where everybody takes it to the woodshed. Everybody goes to the woodshed type of thing, even with all the three major indices down. I don't include the Dow as a major indice. I don't look at it that way. It's the oldest. It's not majoring. Look the Russell, look at the S&P. They're all down and the Russell's leading down. That's constructed. That means that we're getting there with the selling, but we're not there yet. I like that energy's down, financials are down, Max 7 are down. The Cathie Wood stocks are down. And what's really interesting is that you have the bonds are up and rates are down today. So that's what's kind of weird, is that the fact that the dollar is up and bonds are up and rates are down, that's telling me that the market may be worried about something that is in the realm of macro trouble with the economy type of thing. And I heard something from fund manager on YouTube. He was talking about trueflation and how the trueflation numbers are really, really falling. And the Fed looks at economic data like the PCE and the CPI, but trueflation is a indicator you can look up online, and it's not something that you have to check like every day, but it's something that you can look at on a regular basis, once every other week or so, and it shows high frequency data of inflation numbers. It's showing that inflation's really coming down quickly. And it's showing that, real-time inflation's it's not at 2.7% or 2.8%. It's more like 0.9%. And if that's the case, you can make a strong, strong argument that the Fed needs to just completely give up any worry about raising rates with inflation. And the real worry should be the labor market, the economy's strength, and the fact that 0.9% inflation is actually could be bearish in the fact that the economy is weakening. But hold it right there, Sparky. What if everybody's got it completely wrong? The economy's actually doing better. it's actually chugging along. Productivity is increasing as businesses adopt and use AI. And maybe, just maybe, new technology that we're starting to use now. Like previous times, could they be deflationary? Could they could they boost productivity, help the economy, and actually reduce inflation? Wow, what if that's happening? And it's very possible that's happening. It's very possible. Nobody's talking about this anywhere, but this is my soapbox, and I'm going to say it. What if that happens? Now, are the issues with the K shaped economy still going on? And certain specific sectors and industries of the economy that are highly sensitive to interest rates? Are those areas of the economy struggling and not doing so well? Absolutely. Absolutely. But are other parts of the economy, specifically parts that are tech sensitive and remote work and exposed to technology and various stuff like remote and the service sector and so on and so forth, are they actually getting deflationary aspects as these businesses adopt AI technology? And are they actually making more money, boosting productivity? And is that actually having a deflationary force on the economy? Yes, that could definitely be happening. So, in this fragmented, K shaped, whatever you want to call it, economy that we're in, we have different sectors exposed to different things. People work from home, people work in an office, people in the service sector, and so on and so forth. And there's different aspects going on. All that is stuff you have to factor in. But, we could have been spooked today by economic data, and it may turn out to be not what we think down the road. So this is all stuff to keep in mind. And I don't know the answers to everything. I'm just giving you ideas. And if I'm the guy that bought Robinhood at 60 and rode it up to 150, and I've held it as the stock continues to fall and fall and fall. So I'm bullish on the long-term thesis, and I don't want to bet against Vlad Tenev, and I think it's getting taken down with Bitcoin. I'm not gonna sell this stock here. Nothing's changed with the thesis. It's just getting trashed with Bitcoin. And this stock has had big sell-offs before. Let's take a look. I mean, we can look at the stock has gone from 25 to 13. It's gone from 67 down to 29. I'm thinking that it could go to 66. Like that would make sense. So you go back to the previous peak and it goes, and that's actually makes sense to me from like a chart aspect, is that we go back to 67 and that's when you buy it, like 67 or 66 as an arbitrary point where the stock could go. That happens. Linda Rashke talks about it. It's like a cave fill. You come back into the pocket of the previous sell-off. So that would be maybe even below 67 or 66, more like 60 a share. That'll be blueprint. But yeah, that's what we're looking at. And no, Palantir too. It's looking like, with software as a service being questioned, that's going to take down stocks like Palantir. Another software stock is take a look at Oracle. So Oracle, there's rumors going around about issues with their debt, and that is just slamming the stock. And to think that just a couple months ago this was a $340 stock, and now it's $135 a share. That's crazy. And it's gone back below the previous high, and it's actually looking to test the previous lows. Stocks can go up and they can go down, but I'm not long Oracle, and it's crazy the stock has sold off so much. It's nuts. They're having some issues with their, there's rumors going on about issues with their debt. When you have stuff like that happening, you stay clear. You stay clear. Take a look at silver. That's one thing that we haven't talked about. We talked about it a little bit, but it's down 14%. 14%. And I mentioned it in another video how it was forming some type of climactic. It looked like some type of climactic top type of formation. So far, it is looking like that is the case. We had this, climax top here at 120, then a big reversal. We sliced right through the 10-day, the 20-day, and went tried it down to the 50-day, bounced off of the 50-day to the 20-day, and are now back below the 50-day, which is basically after the retracement from the climax blow off top, you get a retracement, and now you get a boom, another smash. It makes sense that it will go low before it goes higher. If because you get this, climax top, blow off, sell off, retracement, then a smash, and then you usually get an extension down more. And a lot of what carried this move, I think, was leverage that was not recognized in the system. Evidently, there's reports that people had like tokenized futures of silver through various brokers, and they were leveraged like 100 to 1. So there was the futures of people that owned leveraged futures, but then people owned these tokenized futures that were leveraged upon the leverage. And that may have been a big driver behind this move. And you may be starting to see the unwind here. I'm going to zoom in here on the intraday chart and see, like, you look at this type of tape action, you see every single down move, down wave here, 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 here is bigger than the previous up wave for the most part. This up wave is bigger than this down wave and this down wave. But other than that, other than this area right here, this retracement here, you can clearly see the momentum in these down moves is bigger than the up moves, the reactions higher. So just looking at this tape action, I don't see any reaction to the upside that will stick. I think we need more downside action before we see some type of bottom. And it makes sense. I mean, it has such a big, huge move. These are Bollinger Bands. But we're getting close to that lower Bollinger Band. That's fascinating. Because I would never have thought, like, it was like, when it was at 120, I was like, whoa, the idea of it going all the way to its lower Bollinger Band at 65, 66, whoa. And now the lower Bollinger Band's at close to 68, and it's almost there. Wow, that's absolutely crazy. And gold, it's getting hit too. Not as bad as silver, though. I think the silver, with all that leverage, that's really the fact that silver has all that leverage and it's had that blow off move, that's like confirmation to me that it's going to keep going down because they got to unwind all that leverage. It's not like a fundamental move. It's a leveraged type of move. And these types of leverage moves, you got to kind of let them play themselves out, and it can take a while. And you can get a couple of days where it rips higher, But just looking at the tape action, looking at 1-minute chart and seeing how every single down move, except for like one or two of them, the down move is bigger than the previous up move. That's you can see the momentum is to the downside. And you look at the oscillators. We're not at a price low, but we're at an oscillator low. We've made lows in the oscillator, but have not yet made lows in there. So we did, but we haven't taken out those lows in the price. Odds are, continuation of price to the downside will happen before this swing low ends. itself. So that's that's the base case for silver. So fascinating to watch them because like I thought that this was I when I looked at this chart and I saw this move here up to here, I saw, you saw this consolidation period, this basing action, and this move up, and this blow off move here. I thought that was it, man. I thought that was the complete blow off top. And then, nope, it comes down a little bit more, stays above the 20-day, stays above the 20-day, never touches the 20-day. And then, boom, it gets bought, and this momentum really picks up to the upside really quickly, really fast. And we trade right back and test the upper Bollinger Band. And then we keep going higher as the Bollinger Band keeps expanding higher. And we just kept going and going and going. And we continue to stay consistently above the 20-day. And now this move down, that's the other interesting thing, is that this is the first move down in silver below the 20-day moving average we have seen since October. So we had this consolidation period, this corrective action. We traded below the 20-day. And since we popped up above that 20-day on November 10th, we tested the 20-day and traded below it. We tested it, but we didn't close below it, I don't think. Just this one day we traded below it. But then since then, we've been consistently above it. And now we're back below it. So I think if you're a bull in silver, because I know there's a lot of bullish people out. I don't like. I'm not a gold bug, and I don't trade metals that often. But this is the market that's moving right now, so I'm talking about it. And what got me was I would go down to my lobby in my building, and I'd get bombarded by people asking me about silver and gold. And every time that happens, it's a peak, it's a top. Every time that happens. So, and that happened right over the past week or so. I think if you're a bull in silver, stay clear and just watch from the sidelines at least until silver tests the lower bowl. With that, I am out of time, and I will talk to you guys all later.